I want to welcome everybody to the Zoom today. This is a presentation on Robo-Forex, and we'll be getting into what this is about, how it works, and show you how you may be able to take advantage of this business. Before we get into all of that, this is a very important slide, which is the essence of this slide is Forex trading is risky. So you never want to invest funds you cannot afford to lose. It's maybe goes without saying, but we have to say it to be compliant. And it's very important really for people to grasp this notion, because somebody will say, well, these returns look great, but on occasion you have losses. We had one yesterday, and they happen, and it's one of those things that in the overall scheme of things, if you've got a good trader, it's, generally you're not going to run into that kind of trouble, but you do have losses from time to time. The bottom line on this slide is right here. Never risk funds you cannot afford to lose. That's really a critical thing to be mindful of. And it bears repeating, which we do every time we do this presentation. So with that out of the way, we'll get into the fun stuff. For those of you that don't know me, my name is Robert Burns. I'm 65 years old, live here in the Seattle, Washington area. And you may be asking, wait a minute, I thought Americans couldn't play. You'd be right. However, my wife and daughter, Anna and Alexandra, are dual citizens. They're Romanian citizens as well as US citizens. So that's how I'm able to participate. We have an account that is through our relationship with their Romanian citizenship. My son, Robbie, he's in Montana, in Bozeman, and in one of the meccas of fly fishing, which is one of the two things I really like to do. So I'll be going out and visiting him pretty soon to get some of the fly fishing in one of the really premier places in North America. And I play bass guitar. On my professional resume, I've been trading Forex since 2004, kind of on and off, but I've really gotten serious about it the last couple of years. And no big surprise, my trading has improved a lot when I really cracked down, cracked the books, buckled down and really started to aspire to be a good trader. Also love the real estate business. I've been in that since the mid 80s and will continue to be in that. It's one of my favorite assets. And last but not least is crypto. Crypto, I have a fond spot in my heart for that because of just a lot of implications, one of which is freedom. The last piece on the puzzle here for me is internet marketing and team building. That's something I've done for, many, many years, since again, the late 80s. And we were doing things involving online marketing before there was some of the terms that are used today, like internet marketing, but been around technology for a long, long while and like it and use it, consistently. Here's what we'll be getting into today. We'll be getting into copy trading, what that is. How does that differ from manual trading? And they are quite a bit different, really. We'll get into the solidity of this broker and why that's a really key thing, to have the certainty that the broker, that they're stable. In other words, there's so many things out there. Rug pulls is the phrase that I'm fond of lately. There was one this week that I'm aware of, and there may have been more, but there's a lot of fly by night companies, and a lot of people are willing to take market risk, but they're not willing to take run away with your money risk. And I'm one of those. I just don't like the idea that, you get up in the morning one day and then all of a sudden your account has disappeared. Not okay. So you'll see why this broker fits that, checks that box. How do you get your money in and out? Is it easy and quick to get your money in and out? And the answer, you'll see that. And the answer is yes, you'll see that. How does compounding work? This is one of my favorite things to show people if they haven't seen it, especially. It's just such a powerful idea. And then second to last is the affiliate part. It's optional. You don't have to be an affiliate here. You never have to talk to anybody. You can be a hermit and live in a cave and enjoy the benefits of this trading. And then last but not least, we'll have a drawing. On the drawing, if you are a guest today and you have not funded your account yet, or if you registered and verified and not funded your account, either one of those can participate. If you funded your account, then that's where the line is. You may not participate in the drawing. So Here's a fellow that did participate in the drawing. Well, this is a whole bunch of folks, but this is actually a very small list. We could fit probably 2 slides with the number of people that have won the drawing. This particular fellow over here is in Northern Ireland, Don Murray, good guy. He went on to take his $100, and this is unusual, mind you. Most of the time, the $100 people will choose to do copy trading with it, and they may not have the skills to do what Don did. But Don was one of those special exceptions, so I like highlighting him because I just impressed me. He took the $100 and he turned it into $200. This looks like 10,000. This looks like 20,000. That's actually pennies, cents. So it wasn't a 10,000 award to turn it into 20,000. It was $100 that turned into $200, but it's still good, right? So let's get into the meat of the matter. What is manual trading? What is manual trading? Manual trading is something where it's really good if you have the desire to learn how to do it. It's something that you can do. It's not easy. It's not simple. You have to have skills, and you have to really work at it. It is, if somebody says, what's the difference between copy trading and manual trading? The broad stroke phrase that I use is one is active, one is passive. One is active, one is passive. This is the active one. This is the one where you've got to be in the game, in the fight, getting in the ring and fighting it out with the bulls and bears each time you trade. That's a part of the drill. Now, what is copy trading and how does it differ from manual trading? Well, copy trading, you don't have to have any skills. You set up your account, you register, in other words, get the link of the person that invited you here, you verify your account, you do the KYC process, you fund your account, and then you choose a trader. Voila, your work is pretty much over. Then it's just monitoring your account and making sure that you like the results of the trader that you have chosen. That's it. And then you might, get wild and crazy and diversify and get 2 or 3 traders that you're enjoying the benefits of their trading from over time. That allows you to also mitigate some risk by doing that, which is good. Now, who is the broker and how do they stack up? The choice of a broker, this is the platform that the traders, in the case of copy traders, there's thousands of copy traders. Copy trading, by the way, you'll hear the term out there in the marketplace called PAM. PAM is a term that is used to describe a technology that is copy trading. It was developed by MetaQuotes. It's popular. I think in the case of RoboForex, they chose to do their own copy trading system. It's completely proprietary, and it's better than PAM. It's quicker. There's less slippage. It's one of the very best systems personally I've ever seen. And so we're excited about that. In fact, just a quick story. So I pay attention to brokers out in the marketplace. I'm constantly trying to refine my trading game. And I ran across this broker and I thought, man, this is a good broker. I didn't know Robert Russell from Adam. I mean, I literally, we never met. I saw this broker. I favorite placed the broker. I put it on my bookmarks of, okay, this is one on a very short list that I want to get an account with. Wind the clock forward, maybe, I don't know, 3 months later, something like that. That was toward the tail end of 22. February this year, this good looking Irishman, Robert Russell, pops up on my feed, and all of a sudden it shows RoboForex, but then I see copy trading and I went, wow, they have, whoa. This is really good for somebody that likes to do networking and team building. And so the rest is history. I saw it. I was immediately impressed. I knew I already liked the broker before I met Robert. That's the kind of the point I'm making. In other words, their reputation precedes them. And the reason for that is they've been around actually longer than 12 years. This number is a little bit dated, 4.5 million. It's actually 5 million clients in 169 countries. They're worldwide. They're the real thing. And, when you see this kind of stability in the marketplace, it's comforting. In other words, this is not the kind of company that will run away in the middle of the night with your money. They're making a lot of money. They're big. They're well thought of. They're regulated in the country of Belize under a regulatory body in Belize called the FSC. They have an independent organization that they were part of the formation of it called the Financial Commission. It's a group of Forex brokers. They got together and said, look, if we have a dispute, it's like insurance to cover people that are clients, and that compensation, if the client prevails, is up to $20,000, but it's independent arbitration. So if the client has a dispute and the commission finds it legitimate, they get some coverage. Just a good faith gesture to have that in place, a good faith policy. Now, what things does Robo4X make available to their clientele as the instruments? Well, of course, Forex, not surprisingly. Cryptocurrencies, stocks, indices. Indices, by the way, is something, when you see this word indexes or indices, these are things like the Dow Jones Industrial Average. The Dow Jones Industrial Average, there's an indice called US 30, which is the top 30 US companies. They're big. It's a wild tiger of an index. It's something we jokingly refer to it as the dirty 30. That's a good example of one of the indices. Another one that is a favorite, Robert Russell is a master of trading this one. It's one called the DAX. That's the top German 40 industrial companies, very similar to the US 30. It's just the German version of it, or the European version of it. There are others. There's the UK 100, the NAS 100. The NAS 100 is the top US tech companies. Microsoft and Google and people like that are on that particular indice. So there's lots of these available to you to trade. There are also exchange traded funds, soft commodities, things like, cocoa, sugar, corn, wheat and soybeans and sunflowers. These things have been really volatile these last year and a half, 2 years since the Ukraine war. So this is something that has gotten a lot of attention out of necessity. Energy, same thing, heating oil, gasoline, or petrol, depending on where you are in the world, depending on how you call that, but things that are petrochemical related. Last but not least is metals. Gold is a favorite instrument of many of us. That's something that has a lot of volatility and can be very lucrative. It also can punish you if you're not good at trading. It's one of those double-edged swords. To just put a button on the broker, there is information which we will provide to you that is really good information about how this broker is rated and reviewed. You can see some of it here, but you can go on robo4x.com and get a ton of really good information on the broker. And they've won lots of awards. Not surprisingly, they're a good broker. So they tend to do very well in the eyes of the media. So now how do we, this is a really, really critical a critical element of the whole business here is the trader. When you choose a trader, it really matters. In other words, how do the traders do? What is the criteria you use to choose a trader? This is some of our criteria. And I added the word at the top to this list. It is the most important, I submit. We can have traders that get really great returns and then don't. Suddenly that return falls off a lot, or there's something that changes in it. I submit that consistency is the most important thing. And additionally, you want to have a trader that has stops. They have a disaster stop, meaning if something goes really wrong, what's the maximum amount of loss that their account and the client accounts that are attached to it, meaning that there's the master, that's the trading account, and then the destination accounts, those are the clients. What's the maximum loss you can take in a day? That's a really important thing to know. Do they keep their drawdowns low? What's a drawdown? A drawdown is when you enter a trade, there's a spread. The spread is the distance between the buyers and the seller, the bid and the ask. And really what you're doing is that's the fee that the broker, part of the fee that the broker gets, that they charge, that they get paid. There's also commissions, but drawdowns, immediately when you enter a trade, there is a little bit of a negative. Most of the time, it's rare that there's not. And then if the trade goes against you, or trades, meaning different positions go against you, you have a larger drawdown. And that drawdown is something you want to keep that low as possible. How have they done in the past? Now, you've heard the old expression, past performance is not an indication of future results. They're right. Things can happen tomorrow that never happened before. That's Forex. That's that risk disclaimer up front. In other words, it's real. If somebody tells you you're going to earn a point and a half a day every day, like clockwork with consistency, run fast the other way. You're staring at a Ponzi. This ain't that. This is real trading, no kidding. And on occasion, you will have losses. I'll show you. We had one yesterday. But past performance, while not being an indication of what may happen in the future, past performance does give you at least a window into how this trader has done, and particularly recent performance. The win ratio, this can be misleading. Win ratio, it sounds impressive when somebody says, well, I win 95% of the trades that I make. Okay, that's good. But how's your overall profitability? Because your win ratio may not be reflective of that. I know a trader personally who is a world-class, brilliant trader, and he has about a 50% win ratio, and he is one of the most profitable traders I have ever seen. So there you go. In other words, win ratio can be misleading, and it's about, do you keep the losses small? And if you're going to have losses, so does the trader good at capping those losses and getting out of that trade where it's a losing trade? The very best traders in the world have losing trades. There's no exception to that. Does the trader have a Telegram channel and a Telegram group? In other words, or a Telegram group? Can you communicate with the trader? So if you have questions about what's going on, you can get your questions answered. What are the total number of trades? In other words, what's the volume? What's the total number of investors? These are key things to get a sense of how well accepted this trader is. And generally, if they have a lot of investors, that's a pretty good sign. There's a reason for that generally. We have a banner that we introduced a couple of months back. We have a number of traders underneath this, but the one I want to focus on today is two different strategies. It's actually the same trader under two different strategies. The first strategy is one called Zorro 2. This is the one that took a loss yesterday. You see right there. Now, when you look at the overall picture, this trader has earned a 24% return. Pretty good by most people's measure when you consider that this was actually in August 14, 13, 11, 12, 10, somewhere around August 10th, they started, not July 13th, right here. They started actually trading. So from a little bit over a month, they made 24% on the money. Here you see this week, there was a losing day this week. This month, they're still up $107. This year, $2,500 up on a $10,000 account, which is now has a balance of $12,932. You can scale these numbers as small as a $500 account. It will have the same kind of return. If you have a $100,000 account or $1 million account, it will have the same kind of return here that you see here. The daily return is a little bit understated because the account actually opened on July 13th, didn't start trading until almost a month later. It was just a long story there, but that's why this is low. You'll see this number go up over time. The number, however, that I want you to focus on here is this one. This is an indicator of the degree to which this trader is effectively managing risk. And a lot of people don't focus on this one, but as you become more experienced in trading, you do. In other words, you see that little dip down, there was a loss. Not a huge loss, but a loss. Here's another one. There was a loss yesterday. Is it an account ending loss? No. That's the point. In other words, the trader got some things wrong and there was a bump in the road. You'll see that go right back up again. I absolutely believe that you'll see this trader is very competent. Here is the Zorro 3 strategy. What's the difference between Zorro 2, which is the one you were just looking at, and Zorro 3? Very simple, just the actual size of the positions that the trader trades. The thing that we're trying to achieve with this strategy, Zorro 2, is to get a 1% gross profit on a given day, net out the 30% performance fee that you pay the trader. You only pay that trader out of your profits, and you would come up with a net of about 0.7%. Okay, that's the objective. And so that's what we're trying to achieve with this trader. The position sizes on Zorro 3 are it's very simple. They're just 3 times bigger. So does that mean you have more risk? Yes. And so if you don't like that risk, don't get with Zorro 3. If you like the returns, however, you might be compelled to look at Zorro 3 because it's compelling. And The position sizes are bigger. The risk is bigger. So far, the drawdown has been almost identical to Zorro 2. So managing the risk really, really well. They just bigger position sizes, bigger return, and yes, bigger risk. Because if he does have a losing day, it will tend to be a bigger losing day, just like the wins are bigger on the winning days. It works both ways. So I would encourage you to get your sponsors trader link to enroll with. If you can reach out to them before we wrap up, then if you like what you see here, we can help you get enrolled right now on part 2 of the presentation today. Now, let me ask you a question. What do you think of this chart? Does this look like a good trader? What do you think? Is that a good trader? This is a trick question, really. Yeah, you look at it and you go, well, it's up and to the right. That looks, what's not to like? Well, I submit it's a little bit too good. Because what you want to see is you want to see those little bites. Like I just showed you on this slide right here, there's a little bite right there. There's a little bite. I call them shark bites. Maybe I should rename them piranha bites. Somebody said I should change my fish. But you see, here was one that slightly went down. Here was another slight one. Here was one that was a little bit bigger, but they're not giant, great white, shark bites. They're little nibbles out of the equity. This is what you want to see. Look for this. You want losses. You don't want the person. There was a gold trader that really bit us, and I knew better. And you learn from your mistakes. I didn't pay as close attention as I should have to the fact that he wasn't managing risk well, and we got punished. And it was one of those, ouch, it stung, we won't do that again episodes. And those tend to be the ones that have the highest degree of learning, And so sure enough, our criteria changed a great deal after that episode because we had some clients also get punished from that. So it was really important to make sure that the risk management is right. I submit the number one thing is not the return. It's how does the trader protect your equity? That to me is the highest criterion in the list is how is the equity protected, and are they consistent? Now, here's a book, by the way, that if you're a reader, you can get the book. If you like listening to stuff, you can get an audio from Audible. This is on Amazon. You can get the book version, of course, the Audible, which is the audio version. You can get this on Amazon. And the third one is the Kindle. Really good book. This guy's a award-winning trader, and he's won competitions. He's worked for Wall Street firms. He brings a lot of background to the table, and it's a very fun read and very informative read that will give you a good sense of why losing, actually, if you handle losing properly, is a part of winning. And it's something that's counterintuitive, I know, but you'll see from this book that it's critical. I mean, this guy's one of the best traders on the planet, and he regularly has losses. Let that sink in. Best trader on the planet, just about, maybe one of them, short list, has losses. So the best trader on the planet, or one of them, does not have a perfect record in terms of having 100% winning trades. It doesn't exist. And, part of our job is to create realistic expectation. And this is me attempting to do that. Now, here's an example, a recent example of a day. This was actually a week ago from Friday. Same trader that I mentioned before. These are the little shark bites right here. Boom, 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 boom. These are piranha bites. So you had a nice profit, gave some of it back, was underwater right here, was negative at that point, and then turned it around. And really on a $10,000 account, this would be considered a break even. This isn't, it's a little profit, but not much of one. Relatively, but it shows and it demonstrates, excuse me, that small losses are a part of trading. And if a trader is really good, they'll try to turn that around quickly and end up with a positive at the end of the day. They're not always successful. How do you get your money in and out? Well, these are the two primary ones that are available in almost all countries, with maybe the exception of India. I don't think India has Visa and MasterCard available. But India does have crypto. UK, you have Visa, MasterCard, but you don't have crypto. Other European countries that are open do have Visa and MasterCard and crypto. My wife and daughter being from Romania, we have crypto and all of this. So Excuse me. We've got fires around here in the Western US, and I can tell it's affecting me today. So I apologize in advance. And there's lots of other payment systems that are used depending on what country you're in. You'll want to look and see what's available, and you may recognize some. But there's like, here's what's available to somebody that if they're a Romanian citizen. N26 was a company I'd never heard of. Revolut I'd heard of. Of course, bank transfer is available pretty much everywhere. And then crypto, and then MasterCard, Visa, Apple Pay, and Google in some places are available. So it's a wide range on the menu of ways to get money in and out. As far as withdrawals, one of the key things is people often will come here and they say, well, how long do I have to wait for a withdrawal? Or do I have to go through some exercise to withdraw my money to get permission? In effect, it's like getting permission to get your money. No, you don't. No, it's your money. You can get it whenever you want. You can get it whenever you want. Robert Russell put this slide together. Here's 3 crypto withdrawals. This is using a stable coin called USDT. He got this one in 2 hours, this one in 4 hours, this one in 5 hours. I regularly use this method, and I don't know why he's taken so long in Ireland. I think it may have to do with his wallet. I get these in minutes. 2 or 3 minutes is 5 minutes is old. No kidding. I can prove it. I mean, literally 5 minutes. Bank transfer. Now here, mine take a little bit longer than his. His in one case was 13 minutes. Visa, MasterCard, 1 day, 15 hours, 1 day. I'm using a company called Wise, which I'm really fond of, and they have a debit card. These are really quick. I mean, really snappy again. Don't know why Roberts are taking it. We tell people, though, 2 days, and then they have a smile on their face when they discovered we lied to them, and it's much quicker. So that's what we do. Now, this again is something that I revisit this slide because what I'm about to show you can be, compelling and people get excited, but I want to remind you, never risk funds you cannot afford to lose. It's very important to maintain that posture, which is use discretionary funds when you're going to play here, because trading is risky. There's a reason that you get these kinds of returns, and it is that you're taking risk. Now contrast that with putting your money in the bank, not much risk. But, if you're getting a 1% return or less, which depending on where you are in the world, most banks pay a lot less than 1%, not a day, not a week, not a month, a year. Hello, a year. If your inflation is 5%, you're going backwards 4%. Take 5% inflation, subtract your return on your bank deposit. If you were lucky enough to get 1%, you'd be going backwards 4%. That's a losing proposition by my measure. Okay. Let's get into compounding. What I'd like you to do is I'm going to send out a set of information that you can use yourself after you see what I'm about to show you. You'll have the calculator. Go ahead and click that link before we exit the webinar today, before you exit the webinar today. And you will have, excuse me a minute. I am fighting the smoke here. And it's not even cigar smoke, which really makes me angry. I like cigars, and it's not even that. It's just we have wildfires here in the Western US. So this is Compound Calculator. I just sent you the link in chat. So if you go to your chat, you can get the same one, and I can show you how to work this. It's really simple. What I want to have you consider is everybody generally starts with, okay, this sounds good, Robert. I will try a test account. I want to put in a little bit of money to test it. Cool. Inevitably, though, if they like the test and the test goes well, which it almost always does, they say, okay, I want to put in some real money to get a significant return. I can show somebody they can make a 2 or 3% return in a day with fair frequency. They put in $100, that's $2 to $3. 2% is $2, 3% is $3. Well, I suspect most of you have a McDonald's where you are, the great American brand that burgers aren't the best, but they do a pretty good job of marketing them and producing them. But it's hard to get a hamburger at McDonald's for $2, right? I mean, so there's this notion of what is a significant return, to do a test with 100 or 500 or 1,000, great. But ultimately, to have something that's a meaningful number that you could actually live on or have pay a lot of your expenses or maybe all of your expenses and be able to really enjoy life. I mean, what if, the crazy notion is, what I'm about to show you, people will look at it and go, that can't be. It's just, wow, that's too crazy and it's insane. The question I have is, what if it worked? And what would be the number that would have you going, woohoo, life is good. I can travel. I can do whatever I love to do with frequency and regularity and consistency. What is that number? What would be the number that you would start with on your account after you've done your test? Please type that in chat. Put the number in chat that is the number that you would have your quote unquote real deposit. Put that in chat if you would, please. Find the chat on your Zoom and type in the account number that you would start with. $500, says Darren. Thank you, Darren. Who else has a number they would like to put in here? Excuse me 1 minute. Come on, guys. This is the participation section of the presentation. What is your number? You've done your test. The test went well. You're good. 150, says Jan. Okay. 500, says Miller Time. Miller Time. That's like Miller Time the beer. $700, says Abdul. 5,000. Oh, I like Marco's number. 500 to 1,000, says Iguna. Inguna, Brazil. If I'm mispronouncing your name, straighten me out when we get to the Q&A. Okay. Yeah, the beer. Okay. You must be you must be from North America. I say American, but it could be just as well Canadian. Miller is a beer that is here in North America. It's very popular ever since I was a kid. Okay, I'm going to use a number somewhere in between 500 and 5,000. I think just to split the difference, I'm going to do 2,500. Okay, and let's say an interest rate on Zorro 2 net, because you have to use the net number here to have it meaningful, right? In other words, or accurate. If Zorro 2 has a target rate of 1%, what do you have to take out of that? You have to take out the 30% performance fee. In other words, every time Zorro or any of the traders earn you a profit, they charge out of that profit. Most of them have that as the formula. In other words, each week, Zorro 2 is an example, there's a 30% performance fee. So if you earn $1,000, you're going to receive $700. So you have to go from 1% to 0.7 here on a, in a daily example. Now, you do that, and let's say you do that over a year, $2,500, 7/10, 1 year. Now, here's a key part. Don't miss this, guys. This is an important question, because if you leave it on the default, which is yes, include all, your number will be overstated. It will be incorrect if you're trading Forex. You have to choose no on include all days of the week, because you only want 5 days of the week that the market is open most days, and excluding holidays. Holidays, the number is somewhat less than this, but 5 days is the maximum in Forex, not Saturday and Sunday. It's not, the markets aren't open today or tomorrow. Now, let's see what that number translates to. So your $2,500 translated into, with a 0.7% return earned with consistency, that would translate into $15,000, which is a 517% return. Now, am I guaranteeing you're going to get a 0.7? No. It's trading. You might get something more, you might get something less. It is real trading. If I had the crystal ball that I could predict what's going to happen tomorrow, man, that would be cool. I don't have that crystal ball. So go in with your eyes open. Know that if you're fortunate enough to have the trader produce 0.7% per day, is the risk in that? Yes. Right? That's how come you get these kinds of returns. But if you look here, here's the little table that's built. We only have, a week or so, week and a half left in September. So you're not going to get the full month of earnings here, but your 2,500 turned into 2,600. There's compounding right there. Okay, then in the month of October, assuming 0.7 is earned each trading day, you have $444. Add that on to your balance here of 2,600. You start November with $3,125. You're seeing in this column, guys, this is the manifestation of compounding right here. Each month, you're trading with a considerably bigger number, and each day, actually, the compounding is happening, because you noticed up here on this choice, it's daily compounding, the most powerful type. The higher the frequency, the more powerful the compounding is. So as you can see, this is a very, very powerful return. I mean, you know, your bank isn't going to come anywhere close to this kind of number, nor are most, I mean, commercial real estate, my background, 12% to 15% was a home run, skin off the ball, out of the park return annually. Most mutual funds or Wall Street numbers are, you know, superstars are getting 12 to 18%, maybe 20% in a year. What if you got this kind of number in a year and you could do so, you know, and earn that? What if? Crazy, crazy idea, right? And look at how things start to go down here as you're, you know, clipping along. These numbers start to get very, very significant, right? In other words, here you're earning $2,000 in a month. Pretty good, right? Let's look at something else here. I want to show you the difference. If we up this, let's say that you like the trading, and let's say that you chose Zorro 2, and you put a little bit of money, you know, Zorro 2, the expected, you know, the target return is 1.5%. Okay, or actually it's 2, but I'm going to use 1.5 to be more conservative. Let's use 1.5. So I'm upping this 0.8%. Doesn't sound like much, right? Not a huge number. 0.8%. You saw down here, this is still showing the 0.7. This 1.5 would be inclusive of the 30% already coming off the top. So here we go. Remember this number right here, this number and this number right here. Okay, watch this. Bada bing, bada boom. Look at what happened. You went from 0.7 to 1.5. Your value now is 121,000. You have a 4,700% return. And, you know, all of a sudden you're starting to earn some really significant money on a monthly basis as this continues. You know, this column right here is your earnings per month. Here's your total earnings, you know, which is reflected right here. You start to see the power of this. I mean, you see the power of this immediately, right? I mean, you know, Albert Einstein said the eighth wonder of the world was compound interest. Albert was right. It is indeed a wonder. It's just mind-boggling how powerful this is. Can you enjoy the benefit of this? Yes. Will you have losses along the way? Yes, that's part of the deal. Don't get upset. Don't let it derail you. You know, those little shark bites as you're moving along, as long as it's up and to the right and the performance is good. You know, we asked people, you know, that had the Zorro account, the Zorro 2 account, oh, he had a loss. Yeah, but it just came out and overall it's still 24% and a little bit over a month. They're happy. They don't have the expectation level that there's going to be no losses. So I'm saying all this to set realistic expectation. Good traders have losses. You will have some. Will it average out over time? Yes. If you've got a good trader, it will. And here's the thing that's crazy too. We're just looking at 1 year. You want to see what 2 years looks like? Look at this. This is stay seated. This is where things get crazy. Now, wait a minute. That can't be. Wait a minute. That's a lot of commas and, you know, a lot more numbers. What if it worked? What if it worked? Now, do you have to wait the whole time for your account to grow and take nothing out? No. There's a number for you that you go, if I get to that number, I want to take half out once I get there. Maybe let's look at this example. And one thing I want to show you, by the way, is in this example, you put in $2,500 initially, right? What's a time that I would have you consider doing a withdrawal? Right here, right up front. You earn 5,500 right here. Take your 2,500 bucks back out. Take it out. Why would I have you do that? Because you've gotten the return of your capital then. You've gotten the return of your seed money, of your initial investment. You have reduced your risk a great deal. Other than time, you've gotten all your principal back. You've really, on your principal, you've completely removed risk. You're trading then from that point on just the profits that were earned. That's pretty cool, right? You got your money back. And that's something I encourage people to do. Don't wait and let it just sit. Pull your money out. Yeah, you're going to delay your whole plan a little bit by probably 2.5 months, 3 months. If the trader is earning these kinds of returns, that would be the time at which you could retrieve your money and get back your initial investment. That's a smart play all day long. Is that me giving you some advice? Yeah, I guess you could call it that. But it's what I would do and what I recommend my people do when I show them this. Get your money out. Get your money out as quickly as you can to retrieve your principal. Get your money back in your hands. Now, once that's done, you can do something like this. Let's say that you go, okay, when I get my account overall to 100 grand, I want to start taking a lot of money out. Okay, fair enough. And you're clipping along right at this point, by the way, of earning about 28,000, 37,000, 57,000 a month. A month. I mean, let that sink in. Let's say we do that. However long it takes to get to 100 grand, you do that. And let's say that we're not going to look at it for 91 years, 1 year. Let's say that you say at that point, I want to start taking out 50%. Okay, so 100,000 bucks. We leave the rate the same. I've put the time frame down to 1 year, and we're going to calculate that. Now you've got a new column. You've got your overall earnings here. This is the amount that you're reinvesting and putting into your account over here. This is the amount. This is a new column right here. This is the amount you're putting in your pocket. How cool is that? Look at this, 7,000, 19,000, 22,000, 25,000 a month. And your account is still growing like a weed. At the end of this run, you started with 100 grand, however long it took you to get there. Your account is now worth 700. You've taken out 600. You've made a 1,200% profit. Wow, there's a lot to like here, right? I mean, that's not hard to take. You're earning a significant amount of money in the process of doing this. How much? Start with $500 to get back in 1 year only. Okay, we'll look at that, Elder. But this is an idea that I want you to really have sink in. There's a point at which if you grow at 100% and you don't take any out, you get the maximum effect of compounding when you're not taking any money out yourself. Get your account after you've retrieved your capital. You've gotten your capital back. Maybe you take 2.5, 3 months to do that. Then let your profit grow at 100% for a period of time until there's a number that you go, and I chose this arbitrarily. Let's say that's 100 grand. You start taking money out at that point, and you can do whatever you want. I mean, you don't have to take out 50%. You could take out 30% and reinvest 70. Watch what happens to this number right here when you do this. This is wild. So remember 100 grand, you left it in. It was $700 in investment value when you started taking out 50-50, 50 to you and 50 to reinvest. Watch what happens when you reinvest 70 instead of 50. Bam, it more than doubles your investment value. You still got 600,000 bucks that you put in your pocket, in your wallet, but look at this. Your account value is now worth 1.5. Now, Elder, to look at your number, let's go over here. I'll put in 500 bucks. I'll leave this return the same. I'll put this at 100%. In other words, to start the example over again with a smaller principal amount and calculate. Your 500 bucks using the exact same parameters would turn into 24,000 at the end of a year. Okay. And guys, there's no hocus pocus here. There's no magic here. This is math. The key thing on this whole thing, as far as the assumption is that comes in daily with consistency. That's crucial. If one day it's 3%, the next day it's minus 6%, well, we have a problem, Houston. That won't work. It's the consistency with which it comes in that really, really matters. Over time, will there be losses? Yes, but is it up and to the right and little bites out that the trader is protecting your principal? That's the measure of the degree to which this works, is the consistency with which that number comes in. That's a critical element in evaluating the traders. So back over to the presentation, and then we'll bring this in for a landing. What I've just shown you is copy trading, how it is distinct and different from manual trading. I've shown you information about the solidity of the broker, shown you how withdrawals work, show you how compounding works, which is not, by the way, unique to RoboForex. Compounding works anywhere as long as you have good returns that are consistent. Just a quick thing. Each Monday, my colleague, Robert Russell, my business partner, he does a class on Monday evenings, which is terrific. It's at 8 p.m. UK time. That's noon my time here in Seattle, 8 p.m. UK. This is intended for people that have decided they want to join and they want to get plugged in. We also have a PDF that we give out to people to walk them through the step-by-step process to get plugged in. I encourage somebody to do the PDF on their own first, and then if they have questions, they can attend the class and get any of the remaining questions answered. Wednesdays, we have a trader training class also led by Robert Russell. This is terrific. He's getting great results with people that want to kind of take their game to the next level. Maybe you're set up, you're running, you've got your copy trading running, and then you say, okay, I want to take some of the same trades that the copy trader takes. You can do that. By the way, do you have to pay the 30% on those trades? No. So there's some advantages to doing that. It's pretty cool to learn that. And by the way, you've taken a baby step toward learning how to trade yourself. Following a good trader, there's no better way to learn than to watch what a good trader is doing and just mimic what they do. Okay. On Saturday, we have this presentation, which is 2 parts. The first part is what I'm doing now, and the second part is what Robert does on Monday evenings is a Q&A and how to get enrolled and some of the mechanics of the enrollment process. So what I would encourage you to do is get together with the person that introduced you, that referred you here, get their link, and then you can enroll. Also, be sure to take a screenshot of this. I'm going to send this out right now in chat. If you go to the bottom of what I'm about to show you here, step number 4 on this link. In fact, let me do it this way. This will be better. You go down here to step number 4 right here, enroll with RoboForex. The PDF is right here. So if you're inclined to enroll, get the link of the person that referred you. You'll need that, and then go to that's step number 3. I'm just giving you kind of the roadmap here. The first step is if you send people here, they can watch the video and get some of the information I shared today. This works 24/7, unlike me. Number 2 is you can plug into our group and our YouTube channel. Number 3, get the link of the person that referred you. Number 4, here's the instructions to enroll. Number 5, rinse and repeat, steps 1 through 4. Okay. So you go here, you're going to get the PDF, and it's a step-by-step, walk you through it, screenshots, the whole 9 yards. In other words, it's really, really straightforward, really step-by-step. You won't have trouble with it. If you do, come to Monday. That's what Monday's about, is filling in any remaining gaps. So let me get this to you. I'm sending it in chat right now, so you'll have that link. Click that before you leave, and you'll have that link available to you as well. Let me get back over here. So I'm going to get into the affiliate plan very quickly. This is optional. You don't have to do this if you're not somebody that, you're busy, or you just don't like, interacting with people, and doing marketing. No harm, no foul. We love you as a client all day long. You want to be a client only? Cool beans. The affiliate plan is simple. It works. You can withdraw your money whenever you wish. You're able to be paid daily, and you can do with it it's your money. You can do whatever you want with it. Pay for groceries, pay for mortgage, whatever you want. Add dollars to the compounding is another idea. Maybe you say, hey, I don't need this money. I'd like to just get that account bigger and have it compound more readily. Cool. That's something a lot of people do. we're paid 4 different ways. One is the profit that you earn, of course, from the trader. Number 2, when you refer affiliates here, you also get a piece of what they earn on their account. In other words, the trader says, hey, if you refer a client to me, I'll split the profit with you 50-50. So your guy, Johnny, that you just involved and just enrolled, you send Johnny your trader link. He signs up using your trader link. You're responsible for him knowing about the trader. You get half of the profit that the trader earns on behalf of the client each week. Pretty cool. Then there's the number 3 part, is the part that the broker charges for fees. You get a piece of those fees. Every time there is a fee charged by the broker, you get a piece, and you get a piece on 4 tiers below your initial, your directs or your personals. And then lastly, there's a bonus that takes place on a monthly basis, which is pretty cool. So let me give you some examples to put numbers to this. Let's say that over time, you get a $5,000 account and you have a profit of 23%. Okay. That would typically be in a month, but it might be, that would be a bit rich for most traders to do that in a week. There are some that could, but it's rare. Let's say it's a month. So $5,000, 23% profit, 1,150 gross profit. You've said, okay, trader, I'm going to pay you. Whoops. Why that keeps popping up. I'm going to pay you that 30%. That's not optional. They earned the 1,150 for you. So here's the math. Multiply that times 0.7. There's your number. You take that away. You paid the trader 30%. You take out 805. That's your net that you add on to your trading account. Next month, it's 5,805. You are seeing the manifestation of compounding right there. Okay. That is compounding working on a very, on a literal, it's actually working daily, but this is the simpler example. Now, people tend to hang out with their peer group, and their peer group probably is similar as far as socioeconomic profile. Let's say that your 5 buddies say, hey, I like what you're doing. And your 5 buddies come aboard and they do what you did. They each come aboard with $5,000. So you have a $25,000 assets under management on your team, 5 people on your team with 5,000 each. They got the same numbers that month. I'm not saying you're going to get 23%, by the way. It may be more, it may be less. Don't know, because it's real trading. But let's say that you were fortunate enough to get 23% in a month, and so were they. You'd have a 5,750 gross profit. You multiply that times 0.3. That's the trader part. So the trader normally would take away $1,725 if there was no affiliate involved. But wait, pump the brakes. There is an affiliate involved. That affiliate is you. You split that with the trader. The trader gets 862, and so do you. So you got money on your own account from the trading. Here you're getting profit from the people that you referred directly on their trading. How cool is that? Then there's a second part of the comp plan, which is any of the fees that the broker charges, they pay commission on, and you get paid on the program on 5 tiers, these percentages. And once a month, you get a percentage, which is based on what you've earned in the month. You get a 10% bonus if you've earned somewhere between 100 and 500. If you've earned between 500 and 30,000, you get a 15% bonus. That can be up to $4,500. These are paid on the first of the month, by the way. And if you are a superstar and you're earning over $30,000 a month in the affiliate plan, you then, your compensation starts, your bonus rather starts at 6,000 and up on the first of the month. So what I've just shown you is it's simple, it works. You can withdraw your money whenever you want, and you can indeed add it to compounding. So now we're going to get into the fun stuff, the drawing. What I'd like to have you guys do, those of you that are guests, please type your name in chat, or just type the word guest. That's simpler. If you're a guest here today and you have yet to enroll, you haven't enrolled yet, type the word guest in chat. We're going to do a drawing and you could win $100. There's the punchline. Okay. We're getting that message through. Good. I like it. Now, if you have registered and you have verified, can you still play? No, Isabella, they got to be on the call on Zoom. Nobody can add guests unless they are on the Zoom. That's another rule that we have, because we've had people do that in the past and then it just got weird. They've got to be on the Zoom, participating and watching.
Do you want a hand with these names, Robert, or are you good?
I'm good. I will get to it here in just a minute. I just want to go over the parameters. So if you're a guest and you haven't seen this before, you can play. If you are registered and verified, you can play. If you have funded your account, you cannot play. So that's the line. Once you funded your account, you can't participate in the drawing anymore. So let me start at the top. Okolo Kingsley. Kingsley, is Kingsley your first name? Is that your given name? I'm going to make the assumption that it is, but I don't want to make that assumption without verifying it with you. So please let me know, Kingsley, if that is your given name and Okolo is your family name. Miller Time. Who are you? What's your name? I don't think your parents named you Miller Time. And I'll wait for a reply on that. And please. Okay. And CHY, what is your name? I'll type CHY for now, but I want to know your name, please. Isabella. Rasak. Okay. Christina. Chris. Okay, that's a different spelling. That looks like you might be from Czech or from Slovakia. Am I right? Or Poland? Z-T-I-N-A. Okay. Anthony. Okay. Again, guys, if you're funded, we'll find out. So don't enter yourself if you're funded, because we will not give you the $100. So not to be harsh, but we do have our rules. We do pay this out every week, and it's no kidding, we pay it. So we want to make sure that the proper people are playing and people that are ineligible are not playing. Abdul, good. Let's see here. Rasak, is Omo Lara, is that your given name? And Rasak is your family name? Okay. Inguna. Claire. Okay, Claire. I see how you got Miller Time. Chinwe. Okay, thank you. Chinwe. So I'm going to get rid of CHY because you'd have two entries in the drawing. So just one is enough. Anthony. Okay, Anthony, I think I already got you. Pretty sure I did. Unless there's, yeah. Okay, I did. I had gotten you already. I am funded. Isabella. Okay, thank you, Isabella. I appreciate that. Isabella is funded. Okay, and Annalise, we already have you on the list. Anybody I'm missing? You do have to be on the Zoom logged in with your own account. Anybody that's missing, raise your hand or type guest or let me know, or forever hold your peace, because we're gonna get this show on the road here. This, by the way, guys, is an ideal opportunity as an affiliate to invite guests, but they got to be on the call, logged in on their own Zoom, having an audience with you. While we like you and trust you, we got to have them on the Zoom in order for them to be eligible to play. Because we've seen situations where it gets weird and it gets confusing. So that's why we have that rule. Okay. I think we've got everybody. One last call for guest. If you're a guest, now's the time, or you will miss out on the ability to earn $100 from the drawing. TikTok. All right. Oh, see, there you go. Right at the end. Boy, the hair on the chinny chin there, Helen. That's Helen got in at the very last minute. Let me make sure I don't have doubles on anybody here. Kingsley, Annalise, Rasak. Rasak, you were telling me something. I remember. Was that is Omalara your? I'll just do it this way. That way it removes any question. Omalara. We know it's either a first name or a last name on Rasak. Not sure, but doesn't matter. We have both. So Christina, Anthony, Mark, Abdul, Inguna, Claire, Chinwe, and Helen. Here we go, ladies and gentlemen. Let's get it ready to rumble. Okay, click. Who's it going to be? Who's it going to be? Who is the winner today? It looks like Mark. Mark is the winner. Nicely done, Mark.
Well,
Where are you? Okay, cool. Mark, where are you from?
Europe, Sweden.
Sweden. Okay. Who invited you here?
Russell.
I'm sorry?
Russell.
Robert Russell?
Yes, yes.
Okay. That's an easy one to track down because he's the guy that's actually paying the money. So,
oh, great.
he's very generous like that. And each week we do this. It's great fun. And we've had some really great success stories from, people starting out that may, for one reason or another, not have a lot of money to play, but they can have that winning turn into something that is much more than just the winning. So it's pretty exciting. Mark, you know how to get in touch with Robert Russell, correct?
Yes.
Let him know that you won, and he will give you what you need to do. Have you registered already for RoboForex?
Not yet. No.
Okay, so you'll need to register and you'll need to verify.
Okay.
Now, the information that I sent out before, I'm going to send it out again right now. This is where you go to get the instructions on how to do that. If you go to this website, I sent it out before, which is this one right here, timefreedomteam.xyz. Go all the way down to step number. You're going to get step number 3 from Robert. You're going to get his affiliate link, and then go to step number 4 and follow the directions there under this green button right here.
Yes. Okay.
Okay. So I'm going to send this out in chat. Be sure to click on this before you leave the Zoom today. Okay. I'm sending that out again. This, by the way, guys, is a really powerful tool. It's kind of a one-stop shop. You can have this working for you 24/7 with your affiliate prospects. You can send them over here, and it's step by step. They don't need to attend it's good if they attend a presentation because they can pick up on the energy of what we're doing, but you don't have to. This can be working for you literally around the clock because there's a presentation right up at the top here. Also, we have our calendar of events up here, and down at the bottom, we have our Dropbox for all the goodies, this PowerPoint that I'm using. Anything I use, I put in that box to make available to the team in this Dropbox. So this site is a very, very powerful 4-step process to getting people plugged in. Getting them exposed is number 1. Getting them plugged into our groups, that's the empower step. Engaging is you get your link to them, your guest, and then you have them follow the directions on step number 4 of how to use that link to get plugged in. And step number 5 is share and repeat steps number 1 through 4. Just rinse and repeat, rinse and repeat. And then they can find out where what's going on here with the event calendar. You click this. If you add this to your Google Calendar, by the way, you'll see these funny looking times, which is my time zone here in Pacific time in the US, the West Coast of the United States. This will automatically convert to your time zone wherever you are in the world. Really handy. So we add an event here. It will always be in my time. And then if you have this on your calendar and you've added it to your Google Calendar, you click that and it automatically converts that to your time. So there's no brain damage. And you click on any of the events. So for instance, here we are on the 16th. You say, okay, what's going on the 17th? Click. Here's all the information you need to plug into that event on Monday with Robert Russell. You want to learn how to do a little bit of trading? Click right here. It will, here's the event that he does on Wednesday evenings. We're going to be adding another event, by the way, here pretty quick on Tuesday evenings, UK time, probably 6:30 or 7 p.m. UK time, probably 6:30 or 7 UK time. Another note to draw your attention to is the first and the third Tuesday of every month, there are free withdrawals. So they don't charge you any fees. So if you're willing to wait 2 weeks, you don't pay any fees for withdrawals, which is kind of cool. So just time your withdrawals to be on one of these days. So with that, we conclude the official part of the presentation. Now we're in